All right, so welcome to the weekly meeting. Oh, 12/2, man, December already. Last month, 2023. Um, I want to take the time in this meeting to cover market structure, right? I want everybody to understand, please, that market structure isn't a one-time thing, and I get it, right? Market structure is very complex. So it is something that you're going to need to spend multiple Zoom sessions on or multiple video watchings on over the time, right? Um, because there are different levels. There are complex structures. There are, your basic structure. It's never as simple or as easy as it looks. When you draw it out on paper, you either see it or you don't. And that's what gets people in trouble. When you take a trade and you're not using structure, you know, or you don't understand the structure, then you're running into uh, possible uh, trouble or problem points. We're gonna watch a video. The video is about 40 minutes, but before we watch the video, I just want to show you guys on this Dixie chart how it all kind of meshes, right? So I want to go out maybe to the 2 month. Let me move this. Okay, so there are different levels to the market structure conversation. There are different levels to to trading, right? So if we look way back here, these are big 2 month candles, right? We get this down move that breaks all this structure, tells us, hey, I'm going to push the market down. That's what it's telling us. But on a higher, or if we squeeze the candles, we can see more of the picture on this super high level. What happened, if we want to tell the whole story, was price was down here, it pushed up, right? When it pushed up, it broke these highs, these relative equal highs, broke the highs. Now it needs to come back, right? And deal with any imbalance from this push up. If you look in here, price pushes to the zone. Now it pushes up. There's an imbalance here. There's still the imbalance here. Like it isn't all the way filled. And there's a zone here. Like if you drop down time frame, you'll see an imbalance here. But the point is, this is the 62. This is the 78, right? If you traded any time or any other for any period of time, you'll understand that you can drop down and it will clean up a lot of what you're seeing on these super high time frames. So when you start dropping down, you will start to see that there are other areas of interest that are that are along this route. And the lower you drop, the more clean it will appear, right? It's not to say, right? You can clearly see an imbalance here. There's the 78. But it's not to say that you can't do this in other ways. I want to go back to this higher time frame because I want to show you something. It's something that ICT talks about all the time. You come down and you get 3 wicks of a candle lined up. It doesn't matter that they're 2 month candles. I know it's an extremely long period of time. Then you get a wick. You get a liquidity run on the lows. It doesn't matter what time frame we're on. When you see this wick, this liquidity run, you know we're pushing up. When we push up, think about this. We break these highs. That's CHOCH, change of character. So where are we going? Why do we need to break these highs? Because there's an imbalance that needs to be filled in this order block. We never pushed and tapped into the order block. But before we can tap in, remember, whenever you get a chalk move, you get a pullback to let you in the trade. You get the chalk move. and I can't see. You get the chalk move, you get the pull back to your 62. And now we can either be off to the races, or maybe we push down to the 78. Maybe we go deal with the imbalance in this 2-month bearish order block. I mean, this 2-month bearish order block right here. Maybe we go up and hit this imbalance, push down further, then go up. Either way, if you understand market structure, you know this is the new swing low, right? This is the new swing high. You're trading in these two ranges, right? These are huge ranges now, but you have to look at where the liquidity is within these ranges. I'm going to take these fibs off. Then I want to go to what happened last month. Okay. We came down and we tapped in to this order block, right? We created an order block. We pushed up. You already know we broke the high. We came down. We tapped in. Normally, if you tap in, you're going to push up. So remember, that's why we're selling EU and GU, where price is going to push up. And it's going to push up to mitigate this imbalance, right? On the 1 week, there's an order block. So it could tap right into that order block. Then it'll probably push down, like we just talked about. But at the end of the day, it's going to respect this low, or it's going to break this low. So I would surmise, right, that if it stops short of this low, then I think we're going to go up here. If it breaks this low, then we're going to go down here. There's no right or wrong answer here. But if you look at what happened, if I'm looking at this weekly structure, high, low, high, low, high, low, they're all lower highs and lower lows until you get that 12-week move we talked about. Broke the highs. So either this is going to come back and respect this low and keep pushing to where we need it to go. We need it to mitigate this imbalance. Or it'll come back up here, fall short of this high, and sell down, break this low, and mitigate this imbalance. It's not hard. It's one of the two. Now, this is still a very high time frame, so it's a lot of little moves that can happen here. But you take the same concept off of this weekly chart, you can do the same thing with a 4-hour chart, or the same thing with a 1-hour chart, a 15-minute chart, a 5-minute chart. It's all the same. You look at your chart, you look at your highs and lows, and you see what's happening, and it tells the story. When we came up here and broke, we said, hey, man, we need to pull back. And that's exactly what it's done. Pull back. If you look over here, there were some lows over here. Wicked that low. We wicked it. What should we want to see when we wick this low? This is the same setup that we saw right here. Lows, wick. Lows, wick. Everything is going to happen the same way, right? This is not rocket science. And I know this might be, I might be saying it fast, but this right here is what's going to make you or break you as a trader. If you understood that these 3 candles lined up, and that's liquidity, and you saw the liquidity be taken, then you would understand, oh man, it's on and popping. And there are different ways, like most people aren't going to ever pull out a 2-month chart. So what I'm trying to tell you is it doesn't matter what time frame you're trading on. If you just look a couple of time frames up or a time frame up and you see these clues, like if you're trading a 4-hour chart and you see a 4-hour wick, you know that we're going to the opposite end. You're going to have to find out what up here do we need to accomplish, right? hey, I thought we had a bearish order block, we should be going down. Why would it stop and wick like that? So on a 4-hour chart, you can start dropping down to the hour or the 15-minute. You'll see, hey man, there's a big imbalance right here. Before we get to this imbalance, we got relative equal highs right here. You know, it's all sorts of stuff. This is a high. So if it comes up and breaks this high, then I know my focus would be on this high. Comes up, it respects that high. But when it respects that high, it puts another level of liquidity. The relative equal highs are right here. Price comes down, then it blows through that liquidity. So the market is just creating, it's stopping and getting gas, right? And it's going to fill these imbalances. Are y'all tracking?
Yes.
Tracking.
Yes.
You should get a million views. You should get 1 million views on this one.
Destiny, you said liquidity is what?
Liquidity is just orders being filled. Did I have that right?
So let's talk about liquidity. Liquidity could be stop losses. It could be, I mean, there are orders here. Yeah, it is orders being filled when the market hits it. Yeah, but liquidity itself is just a pile of orders. It might be billions of dollars right here, right? It might be billions of dollars worth of sales stops. Like if price breaks this low, some people trade breakouts, so they're going to automatically be put into a sell. Some people were long here, right? Because it came down long. You know how support and resistance people are. Here's support, I'm buying. Here's resistance, I'm selling. Here's support, I'm buying. Here's resistance, I'm selling. Here's support, I'm buying. Here's resistance, I'm selling. They're making all that money, and then they support get ran through. So it's liquidity means that these market people are going to make a lot of money, right? By running through this level, they're going to pocket these billions of dollars. They're going to pocket the people who got stopped out for being long, and then they're going to pocket the people they trick thinking that they're going short, and then they yank the market up. So you can look at liquidity as a place where there are orders piled up, where most traders are trying to either get in or get out of the market. Does that make sense?
Yes, that makes a lot of sense. Thank you.
So you're welcome. If y'all look at this candle right here, you can see that huge imbalance, right? From here to here is an imbalance.
Yes.
We tapped into the imbalance at the same time, right? There's an order block down here. There's imbalance in this candle. So, well, actually, it's not on a lower level. It's imbalance, but the market still needs to push down. We don't have to even guess where it's going, because if you keep dropping down in time frames, the market will give you everything that it's trying to give you, right? Here you have a bullish order block. You got to pull back. We should tap into this order block, and I expect it to push higher. I can get that that expectation off. If I throw a fib from here to here, which we already really did, we're going to get a 62% retracement. Look at those equal. See all those wicks are equal down at the bottom. Equal lows. That's liquidity. It's liquidity down there. This pulls back, taps right there at the 62. Wants to push up. If I go to this 4-hour chart, the market's coming down. It pushes down to the low point. Then it pushes up. We break this high. We break these highs. That's chalk. Throw the fib on it, right? I can throw the fib from here to here. I should get picked up either the 61 or the 78. At the 78, if I can drop down to the 15-minute, let me go to the hour first. I don't want to skip it. If I go down to the hour, this is exactly what you see, right? You see imbalance. You see an order block down here, right? An order block that's not been tapped in. This is a zone, right? You have a demand zone down here that when the market pushed up, it left unfilled. So as a trader, you should expect that once you go up and break highs, chalk, you see I have it labeled. Now you're coming down to fill this zone. So if you were trading a Dixie and you saw this chalk and now you see this big red candle, you know where price is going. So you drop down to the 15-minute. And wow, right there in that order block, I see the imbalance from this push. There's the imbalance. Okay.
That's top shelf.
So do y'all see how you can use the structure? Do you understand what constitutes liquidity? Do you understand where your swing highs and swing lows are? This video will break it down better for us. If you're trading on the 4-hour, you should know where your swing highs and swing lows are, right? So when they get violated, then you'll understand. Every level will have a chalk. So eventually this is going to push up and you're going to break this high. It's going to be chalk. So you get a pullback at some point, right? It might break this high and this high before it pulls back. Then it's going to go do what it's supposed to do. At this point, you might get a pullback, but you're going to have to look at where your swing highs and swing lows are. Either it's going to pull back to the swing low or right around the swing low. It might be an up move and a pullback 78 to push through these highs. That will let you know what direction that the market is going. The breaks of the highs and lows, right? On the lower time frame, probably a 1-hour. On the 1-hour, you get these change. The change of character for this is on the 1-hour, right? Well, I would say the 15-minute. So on the 1-hour, I would probably say this is a low, this is a high, this is a low, or I would just say this is the low, and this is high. On the 15-minute, this would be a low, this would be a high. Sometimes, or most of the time, is not going to be clear. So that's why it's going to take you some time with seeing the chart. Whenever you see highs on this side and highs on this side, where you can have a shoulder, a head, and a shoulder, that should tell you, okay, this looks like a chalk. You can't have a head and shoulders without a chalk, right? Because you're going to have a low, a high, a low, and then you're going to break some level, right? The level that you had this low, you're going to break that level. And that's how you're going to know you had a chalk. So maybe you can't see it on the time frame you're on. Like maybe you're on this 4-hour and you don't see this as a chalk. But the fact that price came back up over this level should tell you that you're getting a chalk. So maybe you can just drop down time frame and you can see it. Y'all have any questions? Ooh, you sure?
Hey Todd, so change of character is that when inducement gets taken out and then that creates an order block.
Well, yeah, yes. Yes, in short, that's exactly what it is. So for all intents and purposes, this is the bottom of the market. This is the bottom of the market. Then you go down and you sweep it. And now you're going to create the order block, right? Whenever you break the level, price pushes up and it's going to be, you're going to pull back in there. So it depends on what level you're looking at. I can see from maybe these lows, because the same thing happened here on a lower time frame where you have, this is the bottom of the market. You get a sweep, you push up, that's an order block. You dip into the order block, you go higher. And on the higher time frame, probably a 15-minute, you would say this is an order block. From this level across, you broke the high. You tap into the order block, you go higher. So if you're used to looking at order blocks the way that I teach it, you're not going to see it like that, because the way I teach the order blocks are based on two candles, right? This is two candles. Now, if we drop down to maybe the 5-minute, this would be a few candles down, and this would be a few candles up higher. It's the same thing. It's the same thing as these candles going down and these candles going higher. It's an order block. Then you get a tap into the order block. Then price will go higher. So that's all this is. You induce, you go higher, right? You're going to have to watch several videos on market structure. The ones that did it for me were the Prince of Persia. His market structure videos for me made the most sense. I'm going to show a different one today. I think that the variety is good, and this guy explains it a little different, but he explains it very well, right? So whenever you're going out and you're looking for your videos, you have to do the research and see what it is that you like seeing, as far as for what does it for you. Because if you can't do that, then you're in trouble. You have to be able to find market structure videos for you. You can't rely on somebody else to line up market structure and then expect to I guess to understand it.
The biggest reason that most traders fail is because they don't understand market structure.
Market structure.
If you're still struggling with market structure, then this is the exact video that you need for all of your doubts to become clear. Essentially, we're going to be looking into the most important parts of structure: how to identify structure, how to use the premium and discount model, how to use the 3 different types of structure that you've probably never heard of before, and how to combine everything to get into a profitable position. Without further ado, let's kick it off with simple market structure. Now, I know you've heard this already, but it's very, very important concept. It's something that we have to dig deep into. So as we look on the chart right now, essentially what you'll see is me mapping out my ideological swing structure points. You can see that we're in a bearish trend, making highs, lows, lower high, lower low, lower high, lower low, and then we have a change of character, making a higher high. So essentially we have bearish swing structure, bearish price action, and then eventually at some point price shifts to go bullish. And of course, at that point in which we go bullish, that is what we refer to as our change of character. The change of character is a very, very valuable concept. Essentially indicates to us the shift in trend. And essentially, once you get that change of character, or let's say hypothetically price looks how it is right now, what do you think you're expecting? You're expecting price, after making a higher high, putting in a higher low, to then go ahead and put in a new higher high. And considering it,
I'm just going to cut in right here. So you see the change of character. This is basically an order block. on a higher time frame, then you comes down to get a tap in. Sometimes it's going to go higher before it comes down and tap in, but it's the same freaking concept. If you see the chalk, it'll be an order block on some time frame.
It is our job as a trader to be able to understand where the market is heading before the market gets there. This gives us an insane edge over the market. Now, that's basic. Let's go and take a look at something that is a little bit more advanced, but also more realistic. Now, it might look a little bit complicated, but I'm going to simplify it very easily. Essentially, what we're going to do is we're going to map out our swing points in structure first, and we're going to map those out in red. So essentially, swing structure is understood as the external swing points in structure that cause price to have a reversal. So if we see here, price puts in a low, and then it has this pullback. Notice though how that pullback is in reality inside of the previous price leg. We have our high and we have our low. That's what we refer to as our trading range. Anything inside of that is simply internal until we get to the edge of price before we then go and put in a new lower low. And then again, you see we now have a new swing structure. We've just put in a lower high and then put in a lower low. So essentially we now have a new trading range. We have high and we have lower low. So we went from high, low, lower high, lower low, price pulls back up. This is the highest point that price puts up before then going and putting in another lower low. So you can see how we're able to identify our swing structure like so. And then from there, what you see is price pulls back. You're likely expecting some sort of respect of this high and then putting in a new lower low. However, in the case in which a change of character occurs, that is unlikely to happen. So what happens is the change of character takes place and we shift from bearish price action to bullish price action with a change of character. Now, the thesis stays the same. It's just in opposition. Now we're bullish instead of bearish, but still we have our swing low, we have our swing high. Price is now trading inside that range until it breaks out of that range. But what you're expecting, the expectational order flow, is that price will pull back somewhere along this price leg and then go and put in a higher high. And so essentially we're looking at price puts in a higher high, has a pullback, and then goes and puts in a higher high again. Now notice that right now we don't know that price is making its way up here. Price hasn't yet made its way up there, but we know that price is making its way up there. So that is the discrepancy on edge. We understand that price is heading here before price actually heads there. And I'm going to now give you some more insight into exactly how it is that we're able to understand that. First, we're going to take a look at the premium and discount model, which is a very, very simple concept. Imagine for a second, if we go back up to the basic market structure, imagine for a second that each price leg, you draw a fib level. So, okay, let's say price breaks structure. So we have right here a break of structure to the downside, and we understand that price is bearish. So what you would do is you would take the high and the low, and you would draw out your fib. And what you want to do is go into your settings on your fib, like so. And then essentially, if you don't have it already set out or you have the basic fib levels, what you want to do is come into style here. And then you want to unselect everything that's selected and only select 0, 0.5, and
don't do that. But you know, I don't trade like that. I do understand what premium and discount is, but don't do your fib like this.
1, and then you can of course color code them however you wish to in alignment with your already color coded charts. So the idea behind this is a super simple one. Let's say the top half of a price leg, right? So we have the 0, the 1, and the 0.5. The top half is what we call premium, right? And the bottom half is what we call discount. Now it's super simple. The concept is that you want to sell in a premium and buy in a discount. And what you can do is you can just refer to that concept as standard economics. I mean, when you're selling something, you want to be selling whatever that is at a premium, right? Let's say you have an asset. You want to be selling that asset whilst it's at a premium. And if you're buying an asset, you want to be buying that asset at a discount. Everybody wants to buy things at a discount, right? So it's a simple concept. We just break the price leg into two legs. We have a bottom half, we have a top half. The top half is called premium. The bottom half is called discount. We want to be shorting in the premium and longing in the discount for the most part. Now, what you'll find is 70% of the time, more or less, price will retrace to at least 50% of a price leg pullback, meaning that 70% of the time, after price puts in a lower low, it will pull back above the 50% level. And when price goes and puts in a higher high, like it does right now, pulls lower low, goes, puts higher high, and we just draw a fib out right here, what we see then is we're expecting price that it's very likely that price will pull back into this premium, into this discount area, of this price leg. And it's in the discount ideally that we would get our A plus setup, and that's where the premium is. So when price gets into a premium, that's essentially when supply comes in. When price gets into discount, that's typically when demand comes in. So that's the concept of discount and premium, which we're going to use in more depth in a moment. Now I want to go over the types of structure. This is a very, very valuable phenomenon that more than likely you haven't heard of before, because I haven't shared it before, and it's a super valuable thing that we use here at Prosperity Academy. So, in an ideal world, your price looks like this, right? You just have a low, a high, a lower low, a lower high, a lower low, changes character, pulls back. But what about everything that happens in between that, typically speaking, throws everybody off? They're not understanding what is a high, what is a low, what's a swing point, what's not a swing point. This is where I'm going to clear that up for you. So quite simply, let's color code things. Let's take our red as our swing structure. So we've got red, and we're going to map this out as swing. That's our one type of structure. Now, the swing structure is the external points where market reaches to before reversing. And so if you look, you'll see that market comes down from here, it bottoms out, it reverses from here, it comes up here, it tops out up here, and then it reverses, comes down here, it bottoms out, reverses, comes up, tops out, reverses, comes down, bottoms out, reverses, puts in the highest point comes down, reverses. And then if we go and put a new high here, this will be our new swing point. So swing structure is a simple concept to understand. Now we're going to go and take a look in the second type of structure. And we're going to color code our second type of structure in purple. Now, our second type of structure is what we call order flow, right? Order flow. And the way I see order flow and the concept of order flow is it's the present moment flow of orders. So swing structure can vary. It can take a whole day to put in a new swing leg, 2 days, 3 hours, it doesn't matter. But order flow is your present moment price action, the present moment direction. And so what we understand is our order flow is another word, again, which we can use for internal structure. So you have your external, which is your swing. But then what happens is, as price comes inside of the price leg, you can see right here, price puts in a high, lower high, higher low, higher high, higher low, higher high. Notice that internal structure is actually putting in a series of higher highs and higher lows at this present moment, meaning that the present flow of orders in this market are actually demand orders, and they're actually increasing price up. So essentially, at the present moment, there is a more bullish sentiment than anything, meaning that this present moment, there are more buyers than there are sellers. That's why price is increasing, right? Simple concept. Now, again, let's ignore this. Again, price puts in a lower low. Then what happens? Price puts in a high, higher low, and higher high. Then price pulls back. Price puts in a high, higher low, higher high, higher low, higher high. Notice that all of these points that I'm referring to as order flow are actually the pullback phase of the swing leg. It's essentially where in a bearish swing structure, you have bullish internal structure, which we refer to as order flow, because that is the present moment sentiment for price to, usually, typically speaking, pull back into at least 50% of the price leg. So we use order flow to understand the present flow of orders, and we use order flow to understand the sentiment inside of a price leg. And then our third type of structure, which we're going to map out right here in green, is going to be Our order flow realignment. Our order flow realignment, and for simple, I just call it OFR, order flow realignment. Right now, our order flow realignment is an amazing phenomenon. Spelling error there, because what our order flow realignment does is it gives us the insight into where price swing structure is going before it actually gets there. So if we look right now, you know, we see our swing structure is bearish, right? We've put in a, let's say, for example, you know, we've put in a lower low. It was a break of structure here. So we put in a lower low, then order flow comes in, low, higher low, higher high, higher low, higher high. And then what happens is order flow realigns itself with swing structure, meaning that the swing structure is bearish and momentarily the order flow is bullish as swing structure is having a pullback. And then the internal structure shifts bearish. That is, of course, an internal change of character. And that right there is our order flow realignment, because the order flow has now realigned itself with the swing structure. And so in theory, what that means is that when that happens, and again, that happens at this point right here, our order flow, our swing structure is already bearish, right? We've already let's say we've had a break of structure in here. So we're already bearish. Now we've pulled back. Now this order flow realignment right here is our value discrepancy between where price is and where price is heading, because we are now able to make the conclusion that price is heading toward this low before it's even there. And again, our only job as a trader is to understand where price is going before it gets there and then get involved. That is how you are a profitable trader. And so this is essentially one of the main methods that we understand how to get our edge over the market. It's understanding that at this point right here, once this internal change of character happens, so order flow realigns with the swing structure, once this happens, we now come to the conclusion that this low is going to be taken out. And, you know, a decent portion of the time we're going to be right. And a decent portion of the time we're going to be able to make money off of that value discrepancy. So that is essentially how you gain your edge. It's understanding that price is heading to this level, and we know that before price even heads there. That is the whole point of an edge. So what happens is we change character, and then the order flow realigns. So we have our order flow realignment, then price puts in a lower low, lower high, and then lower low. And at that point, we've had our external break of structure right here. And again, we're going to go and take a look at all of this on the charts in a moment. So our external break of structure, then what do we have? Well, we have our order flow comes back in because it makes a high, higher low, higher high, like so. That essentially is the pullback phase of the swing structure. So price pulls back at least into 50%. And then what you'll notice is that order flow realignment right now is actually the same as the swing leg. Now, this can happen, and this is why I purposely created the graph like this, is because not every single time will there always be internal structure in an external structure leg, because sometimes price can move so aggressively into one side, there is no pullbacks inside of that price leg. In fact, the price just melts straight down, which we'll see an example of when we get into the charts in a moment. So I wanted to put that in there, but still understanding the concept of, you know, as price takes out this low right here, as order flow shifts from bullish to bearish, we already know that this low is getting taken. So it's still, we know early, but there was just no opportunity to get involved in the market. And then what happens? Price puts in a new lower low externally. So we have a new swing lower low, break of structure to the downside. And then our order flow, again, if we shift this back to purple, our order flow puts in high, higher low, higher high, higher low, higher high. Now, in doing so, essentially, this is order flow because at the moment we're still bearish. So we're expecting bullish, and then at some point, price will shift bearish and we'll go lower low. Now, out of a trend, right? Let's say we have a trend, and that trend is making a series of lower lows and lower highs. Now, typically speaking, the change of character is completely unpredictable, meaning you can predict the next lower low, you can predict the next lower high, you can predict the next lower low, but you can never predict going from a lower low to a higher high. You can't predict it. We can only understand a trend. Until that trend changes, change of character, we can't understand it or anticipate or plan for that happening. Now,
I wholeheartedly disagree. I think He's specifically talking about if you're just looking at one time frame, right? You can't predict the change of character. But on a higher time frame, if you know your price is coming into a zone, you're waiting for the change of character. You're expecting that change of character.
Luckily, that only happens, 20% of the time where we shift from bearish to bullish, and that 20% of the time is unpredictable. But for the most part, you can see we expected a lower low, we got it. We expected a lower low, we got it. We expected a lower low, we got a higher high. And so that's just essentially how it goes. But then we've shifted bullish. Again, remember our order flow is the pullback of the swing leg. So it's usually contrary to the swing leg. If the swing leg is bullish, which it now is, then the order flow is going to be the bearish pullback. So what do we see? We see price puts in a low, lower high, and lower low. So the order flow, we know we're in a pullback phase right now because the order flow is putting in lower lows and lower highs. But then what happens? Order flow realigns itself. Order flow realigns itself right here because we have our internal change of character to the upside. Now that right there, again, remember that right there is our indication now that this high is going to be taken out. So we have a conclusion into where price is heading before price is even headed there. And so lo and behold, what we'll see most of the time is price will have its pullback and then it will take out that leg. And what it is our value as a trader is this move right here. But in order to get that move right there, we had to understand this whole picture beforehand, because to know where you're going, you have to know where you're coming from. And so that is essentially understanding our three different types of structure. We have our swing, like so, price pulls back, and then this is the furthest point in the pullback. That becomes our swing low, and then we go put in a higher high, swing high. That's our swing structure. Then we understood that our order flow is the temporary pullback of the swing price that is always opposite to the swing structure. Then we have our order flow realignment, which is when price realigns with the swing structure internally. And then we have our order flow, realign, order flow, swing, order flow realignment. And then we built that whole hypothesis to make money in this move right there. Let's go and take a look at how we can apply this right now to a live chart and get into a profitable position. So pulling up, here we are on the 15-minute time frame, and we're doing it the exact way we do it inside of the Prosperity Academy in a circle. So we're on the 15-minute time frame, which is our main time frame. And essentially what it is we're looking at is the 15-minute order flow. So what we're going to do is we're going to start out by mapping out our order flow. So we're starting at this low right here. And again, that should be in red. Starting out at our low, price pulls back, right? Lower high, it's lower than the previous high. Lower low, we put in a new low. Lower high, lower low, lower high, lower low. Shift to the right a little bit. And then what's happened? Price has put in a higher high. So we've gone from, break of structure, lower low, pullback, break of structure, lower low, pullback, break of structure, lower low, to shifting to a bullish, right? We've pulled back, and then what we've had is price has actually put in a higher high, change of character. So the order flow was bearish, lower low, lower high, lower low, lower high, lower low, and then the order flow shifts bullish. So you see that, and then in doing so, again, if you guys remember our premium discount, if we take the high to the low, which is where price broke structure, and then we put in our discount and our premium, notice that the furthest point of the pullback right here lands inside of this premium level.
It also lands inside the imbalance, right? The imbalance that broke. So it's all the same information.
And then we pull back, we break structure again. So let's go ahead, take our high right here to our low down here. And again, understand that we have our premium area and we have, of course, our discount area. Notice that the pullback lands inside of the premium area.
think he said it landed inside the imbalance.
Then price break structure, and then we change character. So again, there we land in premium and we land in premium. And that's the point in which price reverses from. So we've gone from lower low, lower low, lower low, higher high. So again, our understanding and our value discrepancy as a trader is understanding that with this shift right here to go higher high, what we're expecting is what? A pullback. So we can put our fib up in here. And again, we have our discount. And remember, if price is bullish, we want to be longer in discount, and bearish, short in premium. So we have our premium, prices come from our premium, it's entered into our discount region. So now that price is bullish, we have our edge. Our edge is understanding that price is likely going to go higher. And so already before price is put in that higher high, we're expecting price to continue moving in that direction, right? Essentially giving us our edge before it's happened. So essentially that's how we can use market structure and specifically swing structure to understand our market sentiment, our essential directional bias. So with that in mind, now we're going to look at the 3 different types of structure within this price leg, because a lot of you guys get confused. And if we look at this right here, what we'll see is we have a bunch of these little legs inside of price. And you guys look at this and you guys don't know left from right. You're like, is this the high? Is this the low? Is this a high? Like, what's this? What's that? Is this our swing? How do I know my swing? And so that is exactly what we're sharing with you today. So notice, right? Price is already bearish. And from this point right here, again, same colors apply. I think we went purple for our order flow. What happens is price puts in a high, it pulls back, higher low. Price puts in a higher high, well, higher high, higher low, higher high, higher low, higher high. So understand there that whilst, yes, the swing structure is bearish, as price pulls back into its premium area, price is putting a series of higher highs inside. We're actually getting a move up, bullish, right? And then what happens? Price changes character in here. Price changes character, change of character in here. And look at that moment right there. At this moment right here, we can already assume that this low is going to be broken. And so we have from this area of price to this area of price, before it's even happened, we are highly sure that it's going to happen. And that is our value discrepancy as a trader. Of course, you have to add on some other things, which we're going to get into. But that is the point in which we assume that this price is going to be taken out. And lo and behold, it does. So again, moving into green now, which was our order flow realignment. What we have is change of character. We put a low in, it doesn't break structure. We put a low in, order flow realignment, lower low, lower high, and lower low. So notice that the internal shift from bullish to bearish, right? Our order flow and then our order flow realignment, all whilst inside of our swing points, right? Our swing points. And again, what happens if we go back to purple? What happens then? Price puts in a lower low, price pulls back, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. So notice again, our internal order flow begins to be bullish. We begin to put in a series of higher highs and higher lows. Present moment structure for this is bullish. Price is increasing. And this is where a lot of people get confused. They don't know whether they should be longing in here or waiting for realignment. Now, again, as we did in the example, what you'll see is the moment that price changes character, right, which happens right here, the moment that price changes character, that's our value discrepancy. Again, we change character, and then we can assume that this low is going to be taken out. So this is the change of character. This is the low. At this moment in price, we assume that from here, we're taking out this. Again, that whole range right there is our value discrepancy. We can expect price to head to here before it's headed there, right? And again, that provides opportunity for us as traders. So we change character, but notice how our order flow realignment, as I mentioned previously, is in this moment the same as our swing. So order flow realignment, we put in the low, right? And that low right there, it realigns, but it's exactly the same as the swing, right? And then price pulls back. And again, this one is a little bit more, discreet. But if we look at it and zoom in, we can see price puts in high, higher low, higher high, higher low, higher high. So even as price pulls back, price is still on a lower time frame, making a series of bullish price action. And then what happens? Price shifts and had its order flow realignment. When the low that puts in the high gets broken here, puts in this low, and then pulls all the way back up to here, and then puts in a new lower low. Again, that's just understanding the.
This would be your imbalance. On if you switch down to the 5-minute chart, you're going to see imbalance here. It's all the same information. You come down, you break these lows, you go up, that's your entry to sell. And it's going to break this low. That's what you're anticipating.
Present moment structure. Now, although it looks very subjective, it's very simple. Price puts in a high, it pulls back, it goes higher high, it pulls back, it goes higher high again. Then it goes lower low, it pulls back, lower high, it goes again, lower low, right? You see how this works. So then we put in a break structure externally. Then what happens? If we look, and again, we're going back to order flow because now we've just broken structure in terms of the swing structure. Now we go and put in a high, higher low, higher high. But hold on a minute. We actually go and put in a lower low. Again, this was a news event, hence why the wick was so high and so low, which is something we don't trade. But still, we go and put in a lower low. So at that point, we're thinking the order flow has actually realigned itself prematurely, earlier than it actually has. And again, that's okay. You're never going to get 100% accuracy. We're not aiming for 100% accuracy. We're aiming for over a large enough sample size. Are we net profitable based on the system that we accumulate, tested across multiple different scenarios over a 100, 500, 1,000 trade simulation? Are we net profitable? That doesn't mean you have to be right every time. That's not what we're trying to do. In fact, there is nobody that is right every single time. It doesn't even exist. So essentially, with that said, we do order flow realign, but then very quickly we head back into our internal bullish price action. When we break structure straight away up here, we go higher high, we go higher low, and then we go higher high again. But notice, as of right now, what happens is the order flow and the swing structure are both bullish. So we've just put in a higher high for the swing structure, meaning we've just shifted swing structure. We're no longer bearish, we're now bullish. So what should we be looking for? We should be looking for long positions, because what we're expecting is, even before price puts in a higher low and higher high, is that price is going to go and put in a higher low and higher high, because we understand that our market structure gives us our directional blueprint ahead of time. And in order to understand that, we had to understand first everything that has just happened. We have to understand where we're coming from to understand where we're going to, because that's the only way that we can understand and replicate the blueprint left behind by the institutions that leave the blueprint, that move the market, right? So with that said, we put in our higher high, we're expecting a pullback and higher low, and then a higher high again. That's our value discrepancy. Now we're going to show you how we can capitalize on that information to get into a position. So the first thing you want to do is, after we have a break of structure to the upside, you want to identify an area of interest, a point of interest, an area of demand. Now, if you're first time seeing our channel or this video, I recommend going after this video, taking a look at our supply and demand videos to understand what it is that I'm referring to. But we have our point of interest. A point of interest is simply just an area of demand, an area that we can use by the blueprint that we laid out, our formula, that we can use to identify where there are orders sitting in the market, so that when price gets to that area, it triggers those buy orders and moves price to the upside, all while we were positioned inside of that move. And so imagine market makers, institutions, banks that have all the capital that move the market, because what you have to understand is, in one 15-minute candle, there are billions and billions of dollars being moved up or down. So we and the rest of the retail market are not moving this market, not by any means. And especially even the thousands of traders that are trading prop firms, They're all demo simulation accounts. You're not placing real capital, real liquidity into the live market. So there's something else at play. There's a different entity moving the market. And when you understand that, you'll get one step closer to understanding the concepts of smart money. So with that said, we just want to position ourselves in way with them. It's like, let's take a river, for example. You have a riverbank, and that riverbank has a flow, right? It's our job to get into the river and let it take us to wherever the current is. And like a river has a current that flows in one direction, the market has structure that flows in one direction. And that's what we use to get involved and let them take us to where they're going. So we can get our value discrepancy. That's our entire job. That's our entire premise. So we put in a higher high. We're pulling back now, and we have mapped out our area of interest. This is our demand area. Why is this our demand area? Well, we have imbalance, number one. We have essentially our final sell to buy that pushes price higher, number two. So we understand that orders need to be mitigated, and likely orders that weren't filled are going to get filled in this area. And again, we don't have to be correct every single time. In fact, we're never going to be correct every single time. We just need over a large enough period of tries to be net profitable. And that's why risk to reward really comes involved. Let's take a deeper look. So what happens is when price gets into our area of interest, we get an alert and we drop down to our 1 minute time frame. We're understanding fractals. So again, just like our 15-minute is bullish and our internal, again, shows us our external, let's take a look at fractal market structure, right? If our external looks something like this, right, with this bearish price action, well, let's take a look at fractals. On a lower time frame, market is going to move something like this, just like the internal and the external. It's pretty similar. Our lower time frame is going to be doing this. And I'll show you what that means, because this is, again, how we get our edge. So we're going to move the internal as red and the external as black. So the internal, the lower time frame, we're going to use the 15-minute and the 1 minute. The 15-minute is black. The 1 minute is red. So our 15-minute structure is bearish, right? We're putting lower lows, lower highs, lower lows. No, yeah, lower lows, lower highs, lower lows. So the 15-minute is bearish. Then the 1 minute, which we're going to put in green, goes like this. We're bearish, lower low, lower high, lower low. We're bullish, higher high. Notice that when the 1 minute shifts bullish, that is when the demand is coming into the market for the 15-minute, so the 15-minute can pull back. Lower, lower high, higher low, higher high, lower low. So now we've had a change of character on the 1 minute time frame. So it's similar concept to internal structure. Our change of character on the 1 minute time frame, now we're assuming that price is going to go lower, and it does. Lower low, lower high, lower low. Then it shifts bullish again, and look what happens when we shift bullish again. The 15-minute is now pulling back. Lower high, no, higher high, higher low, higher high. Then we shift bearish again. Lower low, lower high, lower low, lower high, lower low. So you get what I'm saying right here. So essentially our value discrepancy and how we use fractals is understanding that, okay, price puts in a higher high, higher low, higher high, higher low, higher high, right, on its way back up. But eventually, the 1 minute might go higher high again, lower low. In this lower low move, we're able to then position ourselves to go lower, because we understand that when this happens, it's likely that we're now going to put in the 15-minute lower leg. It's just the same as the internal structure, but actually fractalized into timeframes to quantify it. So the same is then rings true. If we are putting a higher high right now, well, when price is pulling back like this, it's putting a high high in this area of price right now. What do you think the 1 minute time frame is doing? The 1 minute time frame is bearish, right? Because the 15-minute is pulling back. These are likely our swing points for our 1 minute, right? Just how we refer to our internal and external. These are likely our swing points for our 1 minute. So what we're going to do is when price gets into our area of interest, which is now, we're going to drop down to our 1 minute time frame, and we want to read our market structure. We want to read our 1 minute swing structure, because when the 1 minute shifts from bearish to bullish, that is our opportunity to get involved. Because what's happened is there is increased demand more than supply. I mean, there is more buying than selling. So what that confirmation does on that 1 minute time frame in this specific area, we use the 1 minute to confirm our bias. We use the 1 minute to confirm the ideology that this area right here is a good area to trade from. Because when money comes into the market, which we perceive through the 1 minute time frame, it tells us you are right. This is an area of interest. There are orders in here because it's showing us the orders right now. So that's how we use the 1 minute time frame. So essentially what happens is price puts in a lower low, lower high, lower low, higher high, higher low, higher high, change of character, lower low, lower high, lower low. So price is bearish, right? Right now on the 1 minute time frame, price is bearish. Where is price bearish from? Well, our current swing structure, swing high and low, is our swing high is up here and our swing low is down here. So essentially, play price, and what we're going to see happen is price is going to change character. So notice right now what's happened is price has changed character. We've gone from being bearish to now being bullish. We've had a change of character to the upside. So that right there, that one move confirms to us that we were right, that there are buy orders in this area. Why? Because price has increased. All of these candles that have gone up, there's billions and billions of dollars flooding into this market in buy orders. And in theory, if there were going to be price continue going lower, it would have been met with resistance from sellers. Because if there were more people or more institutions or more whatever it is, the algorithm selling orders at that specific price area, price wouldn't have been able to go higher because you're just met with an imbalance. It's super simple. If there is $5 billion worth of sell orders in a price leg and $100 billion worth of buy orders, well, price is going to very easily go up in price because there is a far more demand than there is supply. It's super, super simple. Now we've got our confirmation that we're going higher. And this right here, again, our value discrepancy. Excuse me. If we go to the higher time frame, and we've had our internal shift now from a 1 minute time frame, what we're expecting already is that this high is going to be taken out. So this high right there, that's our target. That is the area in price that we think that price is heading to ahead of time, regardless of anything, because it's just putting a higher high. Now it's putting its higher low, then it's going to put in a new higher high. It's just probable. It's just simple. So when we get into the 1 minute time frame, we've had our confirmation. So now what we're trying to do is get into a position and then get out of the position at this high, because we already know price is heading there, and we know price is likely heading there from where we are right now. So our value discrepancy, the money that we make, is we get in now and we get out there when we know it's headed there. It's just simple. It's super, super simple. There's no need to overcomplicate this stuff. And again, Einstein said it himself. If you can't explain something simply, you don't really know it. So when you
All righty, buddies. Y'all have any questions over the video? Brad, no questions. Brad.
If y'all are not excited, I don't know what's gonna make you excited because it's so easy.
What was that? What was that thing he used to what was that indicator that helped you identify the actual high, the actual low, so you don't get like
It wasn't an indicator. He marked
No,
it.
no. Somebody in the group, there's an indicator. I forget. Somebody knows who got that indicator that tells you the.
oh that one tells it too. The one Ant Smooth posted.
Yeah. There's a lot of indicators. They indicate chalk. So whatever one you find, there's millions of them.
But
Not chalk. I guess I'm trying.
Well, when you understand what chalk is, you won't need it to tell you that, right?
yeah, I just think that it's so simple if you learn it. I wouldn't wait on an indicator because an indicator is a lag. It's a lag deal, and you're going to be behind all the time. We catch moves because we see the moves before they happen. Somebody goes and posts the weekly order blocks, and when we get a weekly order block, it's telling us that, hey, this is going to happen. So we can get on that. We can get on the move.
I don't want it for the move. I just want it to help me to identify it with my own eye. But I want to
Yeah,
like
I
a
hear what you're saying.
I'll post it in the chat.
Yeah, please. And just for those of you who aren't those of you who are new, right? Those of you who aren't vets to trading, you know, all you have to do is squeeze your chart in and mark your highs and your lows, right? Highs, lows, highs, lows, highs, lows, highs, lows. Mark them all the way up, however high you need to go. Now, in this case, let me put my cheat lines back on. All right. In this case, this is the swing low. This is the swing high on the weekly, right? So if we're trading the weekly chart, if I drop down to the daily chart, I know for sure my daily chart is not going to violate my weekly high that was just put in. I'm just expecting a pullback, right? Because if you look on the daily chart, it should be pretty easy to see. This was a high, this was a low, this was a high, this was a low. We just broke this low. Let me just make it bigger. It's pretty easy to see that we broke this swing low. So that would be a chalk. And you'd expect for the price to pull back, right? Whenever it pulls back, you know, this is where it's going to go. I'm assuming that it's going to go to this demand zone down here that I've identified by dropping down, and then pull back to this zone, right? And all I did was fib this weekly candle. I fibbed the weekly candle. I don't have a premium and discount, right? Sell it premium, buy it discount, but it's all the same thing. If I fib this candle, the move goes down and hits this zone, it's going to buy up. So I see where the chalk has happened and we've gone bearish. Now I'm just waiting for the turnaround because I know once we get chalk, it's going to turn around. If I keep dropping down in price, whoa, I see this order block. Remember, down move, up move that broke the high, that went higher. There's an order block. Well, that's probably a good place for this price to push to, right? Somewhere, maybe feel this imbalance, maybe just tap it. You're going to violate another low. Tap in, buy up to the imbalance, right? To the imbalance of our move. That's it. That's what we do every week. Every week.
And there's levels, right? So for the people that want to use the indicator, right, that's a level. You're going to get to the point where you're not going to need that anymore. And you need to graduate that, right? You need to graduate being frugal with the amount of lines you use. You're going to get to the point where you're going to be a naked chart trader because you see it. You don't need the lines. You use them because you just want to see some things, but then you can take them off. That's where you're graduating from level to level. I don't need that anymore. Right. You should be saying that. I don't use that. I don't need to.
And this is another thing. You see how you have a area of consolidation in here. That's what most people would call this, instead of reaccumulation. If it's going up, it's accumulation. But you can see how you have this area, right? Then you come down and you take liquidity, then price pushes up. Gives us an order block, right? Gives us another order block. If I measure from the bottom of this green candle to this wick and this pullback, what am I going to get? What do y'all think? Bueller.
62.
78.
Oh, 78.
There's my OTE right there. It's going to go up. Now, I don't expect price to break this high. I think it's going to come, just fill in the order block, fill in the imbalance, like the area that we showed before on the lower time frame, and push down. And I don't have to be right. I don't have to know what it's going to do. All I'm telling you is, hey, this is a 367 pip move we can catch. That's what I'm trying to catch. I don't have to know where it's going beyond that. But if I did want to know, I just keep climbing order block. I mean, I just keep climbing time frame, right? And at some point, I'm going to get to a level like, man, we just tapped into this bearish order block. We probably going to cook like Crisco. I don't have to know though, but I'm just saying there's ways that you can see higher things. Most people aren't going to go way up here in times and all that stuff, and that's cool. I'm not expecting anybody to do that. But what I'm saying is, if you're ever curious on how we come up with what we come up with, this is exactly, it's not any tricks, it's not any I don't know, joking around, or it's doing the same thing over and over, right? Seeing when we break the low, price should go back up, pull, but it didn't. It kept going. On the 4 hour, we broke this other low, right? You see another break of service pushing down. Where the heck is price going, right? Well, if you throw the fib on there, you would know, man, it's probably coming right here to this OTE, right? Probably gonna break that low, fill in this imbalance, and push up. And when you think about it, most of the time, I know y'all don't do this, and this is not important, right? But if you pay attention, most of the time when the market opens, you get a move that lasts from Sunday to Tuesday. And it's normally 100 pips or just shy of 100 pips. This would make sense to come 93 pips, tap in, and then you get your move from Wednesday to Friday, right? Maybe it doesn't finish, maybe it's close, but it makes sense. There's logic to it. The important thing in these moves is understanding the structure and what's going on, right? Not necessarily the pip count. That's just stuff that I kind of pay attention to because I've done this for so long. I recognize this as a bearish order block, right? This candle got engulfed by this candle. On the 2-week chart, if it looks better for you, because this looks more like an order block to you, that's cool too. It's still a bearish order block. I still expect price to push up, tap into that order block, and either go down and break a low or die. It can just come down and equal lows and go higher. It doesn't have to do it because that's what I'm expecting to do. It could push, the next candle could push up, tap in, and either push lower or come and bounce, make equal lows, and go higher. Does that make sense?
In either way, we won't be leaving pips on the table.
Exactly.
You have an opportunity to take that to that swing low. Whether you want to hold it or not, you can take the profit at that point. And that's what we mean by going both ways with it. when the opportunity presents itself as a profitable trader, as a person that knows this game, when it shows you that, you're supposed to take that trade.
And if anybody had been trading UJ before, you can see this impulse move that broke these lows, came back. If you fib from here to here, it's going to be a probably close to a 78% pullback. And then it pushed again. Let's just measure. Let's just measure it. Holy moly, man. That dude Todd, man. That Todd is halfway bright, man. And then half of y'all look and say it's going to the negative 27. If that's where you want to stop. You know, y'all trade the way you trade, but understand your setups, right? And we're not just taking it to the number. That's an easy way to do it. I don't have any problem with that. You know, everybody has to start somewhere, right? But understand that there's always a way to get a more exact measurement. All right. Now I want to show you something else, because this is always going to be true. At some point and on some time frame, you had a high right here, then you had a wick of that high, and price started pushing down. Same with here. A high was created, then the liquidity was taken, right? When you see a wick, look, is it taking liquidity? If you see the wick that takes liquidity, it's time to get in for the ride. You know, after that liquidity gets taken, it's going to be a flush. And you can't get in. Your entry is not going to be on the same time frame that you see your setup. It's always going to be on a lower time frame that you can get an entry. Is it equal highs or equal lows? Because those are always going to be targeted. If you ever see the candles line up and you get equal highs, you get equal lows, bruh, that's a setup. That's a target, right? It's going to be taken out. And it's nothing that you're going to be able to do about it, right? These are relative equal lows. These will get taken out too, right? It doesn't matter what you're trading. It doesn't matter the time frames that you are trading. What matters is that you understand your structure and you understand what's taking place on the charts, because that's what's going to keep you on the right side of stuff, right? ICT teaches a concept that if you go on the daily chart and you see a wick of the highs, get in, right? Because it's going to the other side. That's what you always say. It's going to the other side. They did a stop and run high. It's going to the left. So in this specific scenario, we all see what we see. You see the candle. Why is there? It's not a need to wick. It's not a need to take the liquidity if you ain't running the other way. You don't need to take it. You could have went equal. You could have went lower, but you took it. If you take the cookies without permission, you got to run. And that's what's going to happen. You're going to see it's going to run, you know, at least to this bottom. Smart money will tell you to always take profit at the lows or whatever. So here's a high, you take profit right here. That would be TP1. I don't trade that. I'm a little bit more greedy. So I'm going to trade the bigger move, but that part doesn't matter. You know, the thing that's important to me, right? And I look at this as a bullish order block, right? You get the base candle, doesn't matter what color, then you get the real candle. I expect the pullback, and we can go higher, or we can get a pullback, go higher and go lower. I don't care. I don't care what happens. I just care that there's room that you can catch a move for 116 pips, 139 pips if it goes further down. I mean, the setups are all over the place. It's just a matter of you looking and recognizing, you know, what's going to happen. If you look at this on the 12-hour, that little wick candle was a bearish order block. Fib the bearish order, you fib this candle, you're going to get a push up to this area. You keep dropping down, you will see what happened. Right here, you get a head and shoulders. It's not just a head and shoulders. It's a high. That high got ran. This was a high right here. That high got ran. Price comes back down, comes back up into this imbalance, pushes down, breaks this low. Price needs to come back to this imbalance that broke this chart right here, that broke this low. Once we pull up into that imbalance, it's on and popping. I don't know if we're going to get another pullback after this low. It don't matter. I'll be in the trade already. I don't know if we're going to get a pullback after these lows. It doesn't matter. You know what I'm saying? Like, it's all I'm looking for is the things I need to see. We see the chart, we see the reversal, we see these lows get taken out. We know we need to push back up into this area before we get out of Dodge. If you keep going down, you'll keep seeing more stuff, right? On the 30-minute, we push up, we break this high. That's chalk. We run into a supply zone. Now we're going to pull back. Where are we pulling back to? We pull it back to this imbalance to go higher, to fill this imbalance, to go lower. It's all in the chart. You don't have to know it to this level, but you should start paying attention, because maybe 2 or 3 years into your journey, you will start seeing that. And I'll tell you another thing. If you never look at videos, this is the only time you look at videos, you might not ever see this. You got to do some studying on your own. And, you know, I will be working diligently to try to get us into like small groups going into the new year, because I think we need to have like levels of accountability. And me coming here and spewing this information to you, getting better and better, and you showing up on Saturday, like watching TV and watching the video at the same time, is not cutting it. You know, when you have people who are trying to impart the information, and I'm not talking to people who are actually trying, you know, and probably 34 of us on the video are actually trying, probably a few other people too. I know we got real life situations and things going on in our lives. I'm not trying to talk down to anybody. I just want to encourage those of you who can give more or who can push more to push, man. Like it's well worth it. But you have to study on your own time, because if you don't do that, you're not going to get to the level that you can get to in the time that you're trying to get there, right? A foe.
Yes.
So if you look at this chart, they said when the order block was created, it takes the liquidity, right?
Yes.
Here's your low. Liquidity gets taken. Push up. From this candle that pushed down to up, there's your order block. That's how you learned it, right?
Yes.
It's the same. So if I put all these candles together, that's probably an hour worth of candles. And this is probably, so maybe a 2 hour, maybe on the 2 hour chart, this is an order block right here. Let me see. That's the hour. So there's your order block. Let me go to the 3 hour. Maybe it's more clear. You see it?
Yeah.
Man, I wish I can do what's 2.5 hours in minutes. 60, 120.
150.
I wonder if it'll do. Oh, That don't look good, but
And the 4 hour,
huh?
maybe the 4 hour.
No, it's in between. The 2 hour shows it. The 2 hour shows it as an order block. But I was just trying to get the order block to be a red candle and a green candle. And I don't think you can really get it. 2 hour shows it like this. The 3 hour shows a red and a green candle.
Or-
But I just wanted a more clear picture. But do you understand what I'm saying, Paul? Do you
Yeah.
you see the order block now the way I look for the order blocks? This is an
Yeah.
order. I'm aware that it's an order block, but for me, I'm not looking for an order block in here. I just want to see the chalk. I want to see the chalk happen. As soon as that chalk, it just so happens that this chalk is the same level that this chalk was, right? Now it comes back. This was the high. We break the high. I expect for the price to pull back down. If I put a fib, it's going to be to the discounted level. Price comes back to the discounted level, then pushes up. Maybe it comes down to this candle here. I don't think so, because we have the wick that dipped into there. But this one was not, this demand zone was not used. That's why I chose this demand zone. So maybe somebody who trades a lower time frame, I don't encourage anybody who's new to trade a lower time frame, but maybe if you are trading a lower time frame, maybe you get this trade with your 3-pip stop loss, and you can take this up to this area, and you get almost a 7% trade in that one move.
And shout out to the lower time frame in regards to how do you prove to yourself that this is happening? You go to the 1 minute and you'll see it all day long. You don't have to trade it, but it's going to confirm to you every piece of these structural theories. Like, you'll see it happen over and over and over again until you feel like, oh, I could play that, right? I'm down on the 1 minute chart right now. I've been away from the 1 minute chart forever, but now once when we talk about looking at the big term move on the higher time frame and go down to the 1 minute when it's time, when it's at discount, when it's at the OTE or the 78, then you go down to that 1 minute and you'll see this play out, and it's a beautiful thing, man.
Y'all have questions? Does everybody understand
I do have one question.
what it is, what it do? What it is, what it do?
I would like to know, because I know that Rose, for instance, looks for chalk on the 1 hour. What time frames, like what's the lowest time frame you go down to in order to look for that?
Well, it depends on really what I'm looking for. So for me, I can see it like with my eye. If I'm anticipating a move, then I can see when it breaks the high, I can fib it, and I know where I want to take the trade. Most of the time, if I'm chasing pips, I can scale down to the 15-minute. 4 hour and 15-minute is very easy. But most of the time, I'm not chasing pips. I got 300 pips at my disposal most weeks. You know what I'm saying? Like, you have to understand what it is that you want to see out of a move. If you're trading EU, right? We expect EU to push down. So you traded this last week?
Yes,
Okay. Did you get in on New York session, or you got it in New York or London?
London.
Okay. So this was your London entry, right? Did you get in at right at the start of London?
I got in on Wednesday, London.
Thursday. You said you got in on Wednesday.
Mm-hmm.
Why you get why you get it at Wednesday? Like just you were just anticipating
Yeah.
up here. Ah, okay. So you got catbird.
Mhm.
Hey,
Alpha, isn't this your monthly trade?
yeah, this
Yeah.
our trade.
Yeah,
So
that's what I was thinking. That's why she got in. She was telling us.
yeah, that's good. That's excellent. This setup is what I try to get the new people. I try to get them to get in because it breaks the moving averages. And this just shows you that the moving averages are just a tool on your chart, right? We were anticipating that this was going to sell this month at the end of the month. So you waited until the 28th, you take your sell, you sit this day out pretty much because it just went back and forth. It was distributing, right? And once you saw this wick go up and take out these, or actually, I guess it created equal highs, but it took out this high, then you knew it was good to go. Price fumbled around, 2 a.m. London. You could have took this move, right? If you missed it in London, it pulled back. It pulled back in New York. You could have took the trade. It pushed down. It broke structure. It gave you that hard wick. If you look right here, it created equal lows. So now price should push back up into this area, right? In between your this is your zone. So it's probably gonna go to 62. In between your 62 and 78, there's an imbalance right here. So it'll probably feel that. Then it'll come down. We'll break these lows and we will feel the imbalance in the demand zone. And if it comes all the way to the 62, that's I got this at 242 pips or 243 pips, at which point it could take out these lows before it gets to the 78, or it could just turn and buy. It depends on what the dollar's doing. And we got NFP next week. So a lot this last move might be like in Friday. And if that's the case, it depends on what my profit is looking like. It might just be worth my time to trade something different, like EJ. I know EJ is gonna be every pair will be affected by NFP, but you want to be in a place where you're either in your profit or you need that you're well into the move to when you get that NFP number, it's going to push you to your TP.
These are the facts.
Okay, well, I think you did answer my question. So basically the 15-minute is
I thought yeah. So listen, Alpha,
Yeah.
you have a good understanding of the 15-minute chart. Do you have a good understanding of the 5-minute chart?
I think this is where I get caught up a little bit, with the pullbacks and stuff, because I do sometimes go down to the 5, even to the 3-minute. But I think I just need to stay on the 15-minute in order
But
to.
I would stay on the 15-minute and listen, mark your chart up. There's nothing wrong with going down to the 5-minute, but you have to mark your chart because you're not going to know what you're looking at. I've had to start marking these charts because so many people either have questions or don't understand what it is that they need to look for. So if I'm marking on the chart when you're looking at it, since apparently nobody is marking their own charts, when we get off the call, y'all go do what y'all got to do, and you don't ever see this. So it doesn't matter what direction that we are trading or you are trying to trade, right? What matters is there's concepts that are being taught, by your boy, ICT. If you go back to video 3, to 2022 mentorship, I know I'll be beating that to death. If you're saying that this is a low, this is a high, equal low, higher high, higher low, higher high, lower, higher low, higher high, higher low, higher high, higher low, higher high, you still can't ignore the fact that this high was ran. That was the high. It came up to it. Some of y'all thought it was going to respect it and give you that sell. It was they induced you, then they ran through you. It's not good to get ran through. Okay. So here's your high. Now we're going to do some Wyckoff, right? We're going to take out this high. We're going to run down low. We don't violate this level. We run up. Now we violate that level. Now we push up. Now we breaking lower. We can get in this trade. We can be a part. And we were a part of this sell now, right? We pushed down. We broke these lows. We pushed back up. They induced you. If you thought they were going back up, they induced you. Then they kept selling and broke this low, right? This was the final break. Now price pushes back up. Sunday, price is going to push down. You can do one of two things. You can take your profit. You can take your profit from your trades and buy it. $92 pips to this level, a little bit more, about 100 pips up. Or you don't have to take your profits. You can just use your equal lot size or double your lot size, buy it up, take profit in your buy. You're going to get a chalk, and it's going to push down, right? That means you got paid for these pips right here. Now you're going to get paid for them again. Then when you take profit, you can put it in another sale, and you'll get paid for these pips a third time and let it push down. Y'all understand that? If you don't understand, you don't have to do anything. I just want you to understand the move. Yay,
Yes,
yay.
I under-
Okay, so let's talk about chalk. How do I know that price is going back up? When do I know that it's going back up? I can stay on the 15-minute and I see chalk, but maybe I need to drop to the 5-minute so we can see this forex clearly. Okay, you got the high. I don't want to do it like that. Okay, you got a high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, break high, break high, break high, equal highs, break high, broke these equal highs, respect high, break low, break low. There's my chalk. My chalk is all, any one of these highs you want to pick, here's your chalk. So what do I want to do? I see the push up. We broke this low, which is telling me we're going to go lower. I want to fib this. You can put your chalk here. That's when it really was chalk, right? But you can't really do anything until it pulls back and breaks a low, breaks a low, breaks a low. That's chalk. That's chalk saying this is going to go lower, right? But like your boy explained it, this is a low, this is a high. This is a low, this is a high. Then you come and break this low. There's your chalk saying you're going lower. Now it's going to pull up to this imbalance, right? If you fib from here to here, your imbalance is close to your 78. Let me make this bigger so everybody can see. And let me remove this fib. I just did it. So y'all see the imbalance right there?
Yes.
yes,
This is where you short it down to either your 62. Here's where you can pick up the trade. And this is where y'all have to understand that you can't be a greedy person, right? You can't, it's not cool to try to take all the chips. You know what I'm saying? This is a 27 pip stop loss. If you're taking this trade back up to the zone where you think it's going to tap in, this is the 62. This is the 78. So it's gonna tap into one of those spots. You don't have to try to hold this buy to the top because you're just buying this in order to sell it. Does that make sense? Elfie, did I explain that?
Yes.
You don't like?
Mhm.
Okay, so I really think we're gonna buy to this level about 110 pips. I honestly think that this is where we're coming, right? To about this order block, because this is an order block that didn't get tapped into. These up green candles and this push down with an imbalance. So that's where price should come to. Should come right to the lip of this order block. Or maybe you call it breaker block. Alicia, if Alicia's on the call, it's probably going to come right up there to the lip of that price, which is 110 pips. That's almost a 4% trade. Then you can sell it for the real action, on Tuesday. It's the same thing every week or every trade that you take, right? Because on the 15-minute chart or on the 5-minute chart, and I really should use a tighter stop loss. There's no reason why we can't get a tighter stop loss on the 5-minute. I'll just protect this low down here. This is a 7 pip stop because here's the imbalance right here. There's no imbalance here. There's an imbalance. So on the 5-minute, you can probably that's a 15 RR. But I mean, this is how it works. And even if you don't trade it, mark it up so you can see it for yourself.
Now, when you get down there to that entry, man, oh man. I mean, whatever your palate, whatever your taste is for risk, when you get close to the stop loss like that, you could put in a 5 lot. If all you want to lose is maybe 250 or something like that, or whatever it is that you're willing to lose, you can do it when it hits there. And you can put a tight stop because you're getting in because of the order block. So if you're trusting the order block, all you have to do is cover the order block. Now you can use a crazy lot size because it's either right or wrong. And that's your opportunity to take that chance. Tucked as close to the stop loss as you can possibly be.
Pat, can you show it on the 1 hour, please?
On the 1 hour? On the 1 hour.
Yeah.
You broke this high. You broke this high. And here's what I can probably make it easier. If you use the high of this, if you have an order block, obviously you had to break a high. So that should suffice as your chalk. Then you want to see it pull down into that order block. Now, every time frame has a chalk. So this is going to chalk on up. Every time frame will have that chalk. That's why you get those pullbacks. But that, you don't even have to worry about that. Just allow it to take place.
Yes, I can see it makes sense because if you zoom out a little bit, basically, since we're expecting EU to be bearish on the higher time frame, and ICT says for the weekly expansion, we should look for the high or look for the high to be made between Monday and Wednesday to then drop.
I agree. So look for it to push up first,
Right.
and
Mhm.
it's likely going to take out your last. I'm gonna delete some of this stuff so we can see. Oh man, I don't want to.
Yeah, and then also for it, like on the 1 hour, the way it pulls back into that order block before it goes up, we're supposed to expect the Judah swing down first to take it up. So
I agree. I
it
agree.
says here, yeah,
We'll
mhm.
run this daily high. We'll close this imbalance more than likely. Probably a full close of this imbalance. Then we'll push down. And depending on you know how much trickery they use, they might make equal highs up here if they plan on running. If EU is going to run up at a later time, so that's why it's always important to look and see where your equal highs and equal lows are. There, this right here, like whenever we broke structure down here,
Mhm.
why would this candle stop? You know, basically at the same level this one, just short of this. Why didn't it just break this low?
Mhm.
This is
Yeah,
your
that was
this is your
down there.
next level.
Yeah.
So I would push. I would expect a push down. Maybe we make equal lows or close lows down here, or you know, actually we'll probably just push down to this level where I got the five pip stop loss. We'll go up these 100 and so pips. We'll catch a move from up here all the way down here. We'll break these lows. Don't expect the move to be like this blue line. It ain't happening. It's gonna be some back and forth, but you know the drill, right? You can always find an entry on the lower time frame, but here's the problem. You need to look at the higher time frame to make sure that you're not getting caught up in a squeeze from the higher time frame. So if you're trading a lower time frame and this daily chart is pushing back to get, you know, we got this move that broke this high and we're pulling back, and you know you're bullish on the euro dollar, and you can't be on a lower time frame and get in for a buy right here because it'll go up and all of a sudden it runs you back down and you're like, man, what happened? Well, it's just a pullback on a higher time frame. So you have to look at those time frames, right? If I am bearish on the euro dollar, my best entry, if I'm trading that a weekly bearish order block, my best entry is going to be off when the daily pulls all the way back. I trade my pullbacks on the 8-hour chart, right? 8-hour and dailies aren't very much different, right? If that 8-hour is pulling back, chances are that daily is going to be on the pullback too. But it would take probably what's 4 times 6? It'll probably take six pullbacks before I'm wrong. And you know, I just haven't traded any pullback. We break swing highs, or we break swing highs or swing lows before I get 6 pullbacks in a move.
6 pullbacks. What you mean by that?
Woo! I knew he was gonna ask that. Okay.
On the 8-hour, you mean?
Yeah.
So it pushes for what?
Well, so you said what?
I'm confused.
I know. Okay, down 1 pullback, 2 pullbacks, 3 pullbacks, 4 pullbacks, 5 pull. 1, 2, 3, 4, 5. This is, see how the 6 pullback goes outside the line?
It breaks through it. Yes.
You know why?
Tell me.
Because on the daily chart, the daily pulled back. How
You
do
mean a pullback
how do I
into
know that?
the moving averages?
Huh?
You mean a pullback into the moving averages?
Yeah, yeah. And actually, this is probably the 12-hour chart that pulled back because there's a 4-hour difference between the 8 and the 12, right?
Mhm.
So if you 4 times 6,
That's
right,
20.
is 20.
Mhm.
So you can expect that every 4th time you'll be wrong, right? And this is a 12-hour, this is probably the daily. And then you get back on track. And then you get this again. And then you get back on track. But that's getting too deep into it. It's
Yeah, that's not. I'm
so
not ready.
I know, but what I'm saying is if you know where your breaks of like where your breaks of structure happen, then you can anticipate what's going on. So remember, I used to show you how to frame the market.
Mhm.
So if you knew this was a weekly high, this was a weekly order block, you can put the W up here. Ain't nothing breaking that. We're trading the weekly pullback, and then you put where the weekly bottom, where the this weekly bottom down here, right? So a weekly can come down and violate the bottom, which is cool, right? Maybe it violates that bottom before it goes to this bottom. So you have this bottom marked, you have this bottom marked, and you have this bottom marked. Those are all on your weekly. So price will pull down into your golden zone here. We're expecting that. You're going to get a reaction. You feel an imbalance. Then the next push could be through this order block going into the 78. But on the daily chart, you're not going to see it unless you have them marked up, right? See how you had that marked up? See how I have that marked up? I know it's not marked up on your chart, but on my chart, I have those marked.
Mhm.
An area of liquidity. That's all that is an order block from here to here.
Mm.
Now, this is the second weekly order block. So I have to have that marked up. I already know that this is my 78. If I fib this move up and pull back, this is the 78. Now, if I look at it from a higher time frame, you saw this was a high, right? We pulled back, we respected the low, we ran that high, immediately came and broke this low. That's chalk. That's chalk. So that's why I expect when price pushes down, we're going to violate this low.
Yes,
Did you see it like that?
I can agree with that. I just don't get that other pullback stuff. But I wanted to ask a different question, please.
Okay, go ahead.
Comparing EU to GU, because I was trading both. GU actually
Yeah, I know you
busted.
got jacked up in GUD.
No, I didn't. I got out.
It's the same. It's the same thing.
But it pushed up far more than
Hey, well, look, man.
I'm in there too, Elfie. I'm jacked up.
It's the
I
same
mean,
structure though.
I had
Here's a low. You ran that low. You get Wyckoff. You get the move up into the imbalance, and we push it down. We pushing. I don't know
yes,
if we
but I'm
violate this
talking.
low.
Huh?
Go ahead. I'm sorry.
Can you zoom in,
Oh
please?
yeah.
Because
Yeah.
Friday, I think it was Friday. Yeah, yesterday.
Yeah, we got this
Oh,
move.
Bob was talking and but yeah,
Okay.
it just kept pushing.
Yeah, I can only trade one at a time. I used to get in a bunch of different pairs like that, but if I focus on one pair, I can make a lot of money. So this buy up, I would have ate. But see, this is the power too of you flipping through your your charts, because you would have saw that this hit your moving averages on the daily, and you got the reaction, right? You got to understand on this bigger picture what's playing out. Somebody sound like
Yeah,
somebody
yeah.
who's snoring.
Unmute. No, wow. I think he fell asleep.
Who?
No, wow. His mic is on.
I was wondering who that was.
Oh yeah, yeah.
Sound
He
like
does
somebody
that.
fell asleep, man.
He
Look,
does that all the
I'm boring
time.
you. So
No, he's on a different time zone. Yeah, he does
I,
that
I
all the time.
know, I know. I'm just I'm being facetious. But look, this we could very well go to this imbalance. This is the 78 for the bigger picture move.
Yes, okay.
So
I think that buy up based off of price and just what OG says about quarter level. So I was in for the buy going up to 27.5, thinking
Okay.
it would go to there before it sold back down.
yeah, I mean, I have this zone marked up. I'm not trading GU. You know, I don't. I might not even trade EU this week. But the the thing is, there are a billion different ways that you can go up to your higher time frames if you get confused down on the lower time frame. This is why I tell people to trade the higher time frames, because it's clear cut, right? If I go on this daily chart, on the bigger picture, we're dropped, like GU is falling, right? I know the dollar is trash and you hear it all over the news, but they can't read the chart, right? We had a high, we ran through that high, we broke all these lows. Now we got to pull up here into into the imbalance. Then we're going to push down. We're either going to break this low or we're going to go in here and fiddle around. But it's a lot of pips at stake here. So what I would say to you is, if you look at the monthly chart,
And that's what I looked at.
well, okay, but you see that there's a bearish order block on the monthly chart. Did you look and see that we haven't tapped into the zone of that bearish order block?
Mhm.
And I get it. So it's not good enough just to know that there's an order block. We haven't tapped into the zone. And if price is going to keep pushing down, right? On the monthly chart, we broke this swing low. We broke it. Now we got to come in and fill the imbalance, which we did. We filled that imbalance. Just like ICT preaches. Now we're pushing down. We got the order block. Go in and fill the order block, right? When we came down here, we broke these lows. There's your chalk. Because we were going up, but there's your chalk saying we're coming down now. Now we got to fill in and we should push down. We're either going to push down and fill this imbalance and push higher, or we're going to push down and challenge these lows. It's one or two things. We can't worry about which one we're doing, but we have to understand what's on our chart. And everybody in here sees this imbalance. So we should expect to push here and push down. We're either going to break this low to get to the imbalance. We're going to get reactions throughout, but these are our targets on the super high time frame.
Yes.
Now,
Okay.
as we walk it down, now we understand why price pulled back so hard, right?
That's the aha moment that people are going to step into moving forward. You're ready to hear this stuff now. That's how you're able to find both sides of it. We learned that we're just going to go one way and that's it. But there's a lot more pips on the table that are clearly available. We just don't know about the chalk. We talk about it as much as possible, right? So you're able to take advantage of both positions at all times. You just have to know it's there. It doesn't mean you have to trade it, but you have to know it's there.
So I think it was Davida.
Wait, oh, hold on. I want to finish this conversation now for GU. because this is a 4-hour time frame. All of us should be familiar with looking at this 4-hour time frame. Did you notice that we came down, right? Did you notice we ran this low right here?
I did. I traded it down to there.
Okay, and you saw that low get ran.
Yes.
Then we pushed up. Did you see a chalk? Did you see this chalk?
Yes.
Okay, it pushed higher. It broke this high too. So now you just fib from here to here, right? Here's your 78. Here's your your golden zone. There's an imbalance, a 15-minute imbalance right here. This is where I think price is going to push up. But notice how it set up the move lower by creating these equal lows.
Mm-hmm.
It generated this liquidity. It came right down here. When it created this order block, it swept these lows, but it didn't violate these lows. It set them up as equal lows. Now we're going to go higher, and when we come back, we'll run that liquidity too.
Okay. Yes, I agree. I just wanted to ask what Davita's thought process was.
What you mean moving forward?
No, for you to get into the buy right there.
Oh, just based off of price, honestly, because I had been studying quarter levels and trying to use that to find my entries into my trades. So I knew that when we sold the first time, I think we went to like 27,300, and that's not really a price where from what I've been seeing it should sell from. So I was expecting it to go higher. So when after price pushed down and then I saw bullish movement, I got in for a buy and was just expecting it to go up to 27.5. And then I saw imbalance on a higher time frame.
So listen, y'all.
Okay.
Quarters theory is great. And it's like support and resistance is great. Supply and demand, all of that is great. The structure, though, tells you what direction we're going. It's either breaking highs or it's breaking lows. Once you break the highs, then you can look for imbalance in the push that made it break the high. If this was a low, once you break the lows, once you break these lows, you look for the imbalance that caused the break in the low. And that's where you would enter that trade when it pulled back into the imbalance, and you can trade it. It doesn't matter what direction, or what we're using. If you train yourself to focus on the highs and the lows, swing high, swing low, and you see it get broke, it gives you an entry, right? This entry is not immediate. If you had taken this entry, it came back, you would have went in a little bit of drawdown. It's not bad, because you had to protect this high, right? Or this swing high. But there, you could have entered there, you'd have went in profit, you'd have came back and went in a little drawdown, but push and went to take profit. Look in the running room where you and Darwana do the bike. But you don't run out of your trade. Like, you don't get stopped out. If you focus on the imbalance that caused at the break, right? There's a break, there should be an imbalance. If you focus on that, you're always going to be on the right side of the trade, right? If you get in here and it violates, then you got caught in inducement more than likely. So you need to look out either another time frame up or whatever. You just got induced. That's going to happen because we rush into trades sometimes. But if you just keep your swing highs and your swing lows marked, you're going to see every time the high gets broken. Whenever this high gets broke, in my mind, I already know it's got to come back and get tapped into. It's an order block. Now, it might not happen that next candle down. It might happen a day, it might happen 3 days, it might happen 3 months, depending on the time frame. But I know this has to come get tapped into. It just so happens that when we push down to this imbalance, we're tapping into this order block. We don't have to overcomplicate it. We see the entry from a higher time frame. We already know where price is going, right? And we know why it's going there. Because on the super high time frame, we pushed from here, we broke this swing low. We're doing the same thing. We're pulling back. If you throw the fib on this zone, this is going to be on the discounted zone. The same thing your boy was just talking. We might say it different or use different terms, but it's the same. This is going to, you sell from the premium is what he was saying. Anything above this yellow line is the premium. I'm just trying to zoom in to the exact spot in the premium. I like to take my trades between the 61 and the 78. This is a perfect spot. If I take the trade here and it pushes up here, I'm fine. But if I look over here and I see, yeah, there's probably imbalance right in that candle. So I can be patient, and wait to see how price goes up. Let me give y'all another another little tip. Don't be surprised if price comes up here and starts selling. Then you get some news and you get that wick, right? The wick into the imbalance and then the sell down. It's another reason why I don't really care to trade US pairs during the first week of the month, honestly. But depends on how I'm set up in how deep I am in profit, whether I'll hold my trade through that news. In my personal account, I'm cool, but if you trade in a funded account, just be careful because those wicks going to fill the imbalances after it induced you. These are the greatest times to induce the traders, in the news. The news is a great opportunity to induce traders.
What do you think about GCAD?
Them selling them selling ones.
And oil.
These sellers. I think we talked about them. What you think about GCAD?
Well, on the daily, it crossed over the whatchamacallit, the MAs, and
But
never broke
I'm
that
saying big
high.
picture. Did you look at the monthly?
I think I did.
All right, let's
It never broke the.
because I see what you're doing here. I see how you working me.
I see how you working me.
Okay. You see GCAD haven't broke these highs in a minute. We're up here, we're wicking out. We got a bullish candle. We know we need to at least sell down to our zone, right?
Mhm.
If I look at this chart, and I fib from here to here, like, because that's where this move came from, here to here, but that's even further down. I got to use my good eye to see that wick. I would say this trade is lining up to look like a doozy.
What's a doozy?
I would say I would expect for price to come down to this fair value gap. That's what I would say. On a from a long range. So let's talk about your other stuffs. So what do you think?
I want to see it sell.
Well, yeah, it is going to sell. But where are you going to get your entry?
Say what?
Where are you going to get your entry? It is going to sell, but where are we entering from?
I'm already in.
So where did you get your entry? Talk me
I
through
just,
it, Elfie.
no.
Talk me through this.
Okay, where's my entry? Hold on.
Here's your high.
On
Here's your low.
Wednesday.
Wait, home girl.
Okay.
We just do it like this, Elfie, just to make this quick. High, low, higher high. We ran your low.
Mhm.
So what's up?
I was on the lower time frame.
Talk me through this. Talk me get through this part.
Yeah, but
Then,
I didn't see all that.
wait, I'm
down.
now that you see it, can you talk me through it?
Okay, I'm not sure what you want to hear right now.
I want to hear what I'm supposed. How do I know where to look to get into this trade after I
From
see
here on out. Okay.
this is chalk right here. This is chalk.
Mhm. So yes, I would fit that last leg down.
Okay, that's what I'm. That's all I'm asking.
Okay.
And I know I'm putting you on the spot, but I think I think you know this stuff. I do Selena like this all the time because, and I want you to be able to do this, or I want you to think of it like this when you're in your own when you're doing your own analysis.
Yes, okay. So
Okay,
yes, fit this last leg down and
there's your
find the imbalance.
there's your zone. But I would rather mark my spots and then go down and see what I see at those spots. So I'm going to mark the 78.
Okay.
I'm going to go to the 12-hour just so I can make sure that price traveled down. Now we're headed up, right? So we probably hit the 68, probably pull back. Yep, that's what happened. We travel from here on down. Now we're pushing up. Oh, what are we pushing to, girl? What are we pushing to? There's a little imbalance here.
There's imbalance.
There's an order block that covers the 78. So in this wick right here, I know there's another order block, right? There's basically imbalance. Jeez, man, there ain't no green candles. Imbalance from here to here. There's no green from here to here. And as I'm looking at this, let me mark this. From here to here, there's my bearish order block, right? My bearish order block needs to be met. It needs to be tapped in right here, right? Can y'all see that? Is this going over y'all's head? Because I'll stop if it's going over your head.
Yeah, over mine, I don't know.
Okay, that's cool. I don't. That's fine. I get it. This is kind of.
Okay. Okay, you
Kinda
said
hot.
in that way.
But you do see that there's no green candles, right? There's no green candles from basically the top right here to here. There's no green candle. You see that?
Yes.
The wick, no nothing. So this is imbalance. This is imbalance from here to here. So
Yes.
I know we have our zone marked up, and basically our imbalance right here. So that would be a great. This would be a great spot to look for a trade to hit. If y'all keep listening to ICT, he's going to tell you that this is your this is your order block. And you should expect price to come hit that from the wick of that candle to this wick is the down move or is the up move before the down move. So I would look for this price to come up in here, and maybe your entry could be 171.88, in between 171.88 and 172.03. You would have to protect this swing high at 172.41. So I would wait for price to actually get into this area and give you a chalk. All you're waiting for, you can get on the lower time frames and you can see a chalk on the 15-minute. You can see it on the 5-minute. I would let price come.
You would protect what?
That swing high.
Which is at 170.
Let me go back up. This is the swing high that I would protect. That's your swing high. If it breaks that high, then your trade idea is not valid from there, right? And then you'd have to look and say, okay, well, maybe it's going to fill this imbalance. Maybe this high, this swing high is valid. But if you fib from here to here, you shouldn't have any issues.
And that's there's only one answer. That's where it's at, right? We're going to discount. You want to catch your trades at discount. And I wanted to say this earlier because he's calling it premium. I call it discount no matter which side it's on. It's the price that's better than the price that you would originally get. But in the regular world, in the investing world, in the regular mind frame, because he's talking about selling an item at the highest price. Yeah, that's what he's talking about. But in trading, we're not selling anything. So it's not the same idea. It's the same idea, but we're not doing the same thing. We're trading leverage. We're not selling an item for a high price. We're just taking a sell position at a high price. And when you catch it, it's at discount. And you always want to be in discount. If you're going to take an L, you better be in discount, right? Don't take L's anywhere other than discount. That's why we always talk about the 62 and the 78. That's where it's at. And with these new videos that we're watching, and they're explaining it to a T of being patient and allowing it to get to that level before you make any decisions. And you can read it like a map, and it's telling you everything.
We got to stop overcomplicating things. If you see, like, this is a great example here, guys. This trade right here, this GCAD trade, you know it's going to sell, right? If you see this trade that just broke this high, you could wait till it came out into your discount. Because we always buy at the discount. Let me grab the right tool here. If you just wanted to trade this on the 15-minute chart, you can set your fib up, wait till price comes down into your discount, right? And remember, locate the imbalance. Here's your imbalance. So this is a high likelihood of where your trade is going to start from. You can cover the bottom of the candle where that imbalance is, or you can drop down to the 5-minute and get a better entry. But you can take this trade to the 62. Smart money will tell you to take it here to these highs, right? But since we're anticipating a sell, you really don't even have to close the trade out. But we're anticipating a sell. You can take it past these highs to your 62. This is a 4% trade. If you drop down to the 5-minute instead of the 15-minute, you can probably refine your entry. So you're looking down here, nothing. This got tapped into. Then you get this one that breaks structure. This is definitely where your entry is going to happen. The candle is so small I can't even see it. Okay, so you can get a better about a 13 pip stop loss and a better risk reward, about a 7% trade if you do it like that. But here's the deal: if you're not a 5-minute entry person, don't be a 5-minute entry person. You know what I'm saying? Don't overextend yourself in your real account. There's nothing wrong with testing theory. Set the idea up and just watch it. But these to me are the give me's coming out of the weekend, or really, you know, at the end of every day. If you get a daily order block and you're expecting a pullback, or you get a candle at the end of the day, to me that's what the Asian session is good for. You can go down to the lower time frames and make a killing. Any other questions?
Thank you.
Welcome. Healthy Tuesday night. It's gonna be on and popping.
Yes, sir.
Don't stand me up.
No, I wanted to say
Don't
too,
oversleep.
when we challenge people to come up with an answer, right? The thing is, there's only one answer. We're trying to come up with this extra technical stuff when there's only one answer. So when we do that, we're doing it for a reason, because eventually you're going to have that answer because there's only one. And then we know you got it. There will be no doubt, okay, this is what's going to happen. We've set the fib. We look for discount. That's what we're doing. So whenever you're asked that and you don't say that, we know you haven't got it yet because that's the answer. So we'll test people all the time with that. You should be saying the answer. We're going to discount. We're going to where that break happened, and that's the discount. Everything that we can say leads to that answer because that's the answer.
This is a big money trade-off because price is coming to this. It's coming past this area. This is your chart right here, right?
Mm.
It's the chart. Price pushed down, gave you another chalk. There's another chalk right there. Now you're going to pull it, tap in, and you're going to come and you're going to fill in the imbalance that broke this down move. Then we'll turn around and we'll do it all over again. But this one trade, this is probably 1 to 10. You know, this is close to a 1 to 10.
Mm-hmm. I'm in it on my personal account.
You're in it for a buy, you're in for a sell.
I'm selling. I've been selling since Wednesday.
Okay, but what I'm saying is this buy,
Yes.
this buy to sell can give you 8.5% buying to get in for the sell.
Yes.
That can give you some ridiculous percent too, because you can do the same thing from this area. You can do the same thing that you did in this area, right? Because you know your entry should be at this imbalance. And all you got to do is protect this high. You can be this nuanced about every trade that you take, or you don't have to be. Or you could just be good with marking your zone, right? And say, hey, I'm buying to the 62, and then I'll get in for the sell. And I'll put my stop loss at the 78. You know what I'm saying? Like you can do that if you want to. You can be that surgical with
Yeah.
it. It's a guy that I put into our Discord. Do y'all ever go to the educational folder and see the videos that we drop in there?
You mean the one with 4-hour strategy or something?
It was a simple let me look for it. Yeah, swing SMC swing trading 4-hour time frame Fibonacci. This dude sets his fib, and he only takes trades that hit his fib number. And he said he does it because it gives him more time with his family. I think it's 79 and 71 and 79 or something like that. So he'll put it, let's say he's risking a 0.5%. 25% of the trade, he'll put an entry at the 71, and the other 25 will be at the 79. If it picks up, it picks up. If not, it doesn't. So he said, he made enough money. He just wants his time. So when he sees those trades, they either hit or miss, and he's good with it.
That's the bot. We can have a bot created that does that, and that's what I'm looking for. This year I will find it. I don't know where, but
So
somebody come up with it.
We could be the bot.
Right.
We could be the bot.
Yes.
The bot is cool, but if all we have to do is look for the same trade opportunities,
Yeah.
we see the chalk, we know where the move came from. Where is it going? We scan where it's coming from. You set your parameters. You don't have to be there when that trade pick up. You can be asleep. You can be drooling, whatever. You set your entry. You set your take profit. Then on the flip side, you set your sell entry, right? Maybe your sell entry is down here. You set your stop loss, and you set your take profit on the sell side, right? Maybe your sell side take profit is down in this area. Maybe it's even further down. But this trade is going to take days, to sell down, so it doesn't matter. It's your entry to your buy trade that you need to take care of. Buy it, sell it. Easy money.
Hey.
Yes, thank you.
You're welcome, Elfie. Thanks for dominating the call. Awesome. No, seriously, I really thank you for participating. It's all of us here we just want to see everybody win, and I want to see y'all win sooner than later. So hopefully y'all want to see yourselves win sooner too. I know, you guys have lives and everything going on. We understand it. We support it. We ask for accountability. Like work on one thing every week until you get it right. Then move to the other thing. Ask questions. Get on the calls. Participate in the calls. This is all free. Like by people who are earning money already, but dedicating time, to try to get you into the same freedom of earning money. So please mark your charts. Please look at videos. Please, don't just rely on us to tell you everything, which I don't have a problem with telling you. Don't get me wrong, but the power is when you see it yourself in the video. The power is understanding that this is an order block. It's a bullish order block. Like I don't explain order blocks as places where they take liquidity and go the other way. But that's exactly what it is. I think when Phoenicia asked me that question, I had to think about it for a minute. And I mean, that's exactly what happens but I don't explain it like that.
Yeah, getting people to meet halfway. Um, we're taught this to debate, and that's fine. But the debate should always end up at the same location, and you have to be available for that to happen. If we can only say, "Oh, well, I do it this way and that way," not really. No, that way, really, right? You may not use it, but it is correct. So there's no debate. It is a healthy conversation at that point. And people got to learn how to let that happen because it's a win for everyone. The more people we have in on the conversation, the better. Don't ever feel like, that's what I'm saying. It's not really a debate. It's really getting to the same answer with different languages. And that's fine. Let it be that. Something that you bring up is something that's probably something that a person in the back needed to hear. So, but if the conversation never happens, then that doesn't happen. We got to make it happen.
You guys have any more questions?
Thank you, Todd.
You're welcome. Oh man,
Why
why is
you be laughing?
you say what?
Why you laughing?
I'm gonna send you a picture. Why are you dragging your boy Puffy like that, huh? On the internet?
Oh, Lord, I can't see it. Oh my gosh. That's so messed up. Poor puppy.
Puffy Kelly.
That's crazy. I would look like Martin Lawrence a little bit in that picture.
I know, but that little hair Puffy got at the front of it. I thought it really was R. Kelly. All right, let me stop this recording. Any other questions? I dropped that video link in the chat.
Todd, I'm sending you my 2 videos today.
Okay.